In this video, I am going to guide you how to detect fake trend line trap and how to save yourself from these type of fake traps. So as you can see, this is the high in this chart, and I'm going to take a trend line. And in most of the cases, noob traders, novice traders usually draw trend line like this. Like they select two higher points like this, high 1 and high 2, and after that when this trend line gets broken, they actually buy at support or just buy at the breakout. And what happens, as you can see, price going down and killing them almost all of the stop loss which they add here. They add a stop loss here, they add a stop loss here, all these are taken. Okay, so in this case I'm going to tell you this is not the way you actually draw trend line. If trend is falling, then you draw trend line from the supports, and if trend is rising, then you draw trend line from resistance. Okay, so this is a case where price is falling. So if I want to draw a trend line, then I have to draw it like this. This is the high, then I take the back side of this support and I connect the second support like this, and I select this line, this anchor to the high of the uh, price. Okay, so here I selected this, so this is my trend line. Okay, now when I selected this two lows, you can see price, it did not give a breakout here, but it acted as a support. The next time, as you can also see, it did not give a breakout, it just closed a little bit down and it went up, took support. Then after that, we know that this is the area where if it's the breakout happens, then we are gonna place a buy trade. So here you see exactly, if once a price given a breakout, then this is a support where you have to take an entry. You can see price went up. Okay, so this is the wrong way to draw and this is a right way to draw. So this I'm going to delete. This is the correct way to draw a trend line. Now I'm going to show this example on the rising trend. So if the trend is rising, the wrong way to draw a trend line is like this. You are drawing it wrong, because I told you if the trend is rising, we draw a trend line using resistance. So here you see the last resistance, this is the low, and the last resistance we got it here, and after that we got a resistance like this. Okay, so now you will notice that once let me draw it like a trend channel here, this resistance and this resistance, and now I'm going to adjust this here. So you see your two supports are confirmed and two resistance are confirmed. So once price gives a breakout, then you are going to take an entry here. So in this case, as you can see, this is an upside breakout, but we are going to sell when price gives a breakout to this line. Okay, as you can see, price is going a little bit extra. So what you can do is just wait for price to come to support. So you just keep the trend line as it is. If price is going extra, you do not change the trend line. Okay, if you change the trend line, then you actually will get a lot of confusion, because once price create a structure from the initial points like here A, B, C, D is like this, then the structure will remain same. We do not need to adjust it despite whatever happen on the price. So most of the people what do is they shift the trend line like this, or because this looks like an accurate trend line. Here you see the rejection, but this rejection doesn't matter to us, because once we are drawing a trend line on the rising price, then our goal is to only short when this support is broken. So then, as you can see, I'll just keep the trend line as it is, and after that just look at this support. When price creates a noise to confuse trader, but don't change it. But here you see it taken a support, and once it's given a breakout here, you can see here you see this is a rejection point. Again price went a little bit to hunt the liquidity, and after that price finally given a fall. So this is the correct way. Now again third time I'm going to show you from this top. From this top, price is falling, so how do we have to draw? Not like this, but from the support. So this is support and this is support. After that, we shift the trend line to the high of the anchor here. Now if we have to just to see that price has created a structure, like I have to adjust this point here exactly, and this is perfect. So our goal is to buy when this is a breakout happens. Okay, so we see first of all in this ABCD structure, we see there are two support which has confirmed, and here we two resistance. So in this case here, if you can see, price did not give a breakout, but in this case here price given a breakout. After the breakout, you have to buy at here, but here you see, if you buy and you place your stop loss something around here, and you see your stop loss will hit. Okay, so you wait for the next time. This one is your stop loss hit here, but here you do not have to change this trend line. No matter price wherever you go, price goes extra, price goes extra here, but you do not change the trend line. Okay, because you see its value. Once you draw it, here you see price given extra, and here also price gone beyond the range of this support, but later you see it's still acting as a resistance. Okay, why this point is not acting as a resistance here? But if I draw a trend like this, then you see price did not come here, but price is still respecting this trend line. So you keep it as it is. Now next time here you see when price given a breakout, okay, then this is a very, here you place a stop loss is going to be very big here like this. But once price given a breakout, then you see price came in this area and it jumped, then this you can see this is acting as a support. But still price this trend line will not change despite whatever is going in the market. And here you can see finally it take support, and price then reversed. Okay, so the main thing is here that once something is plotted, it remains constant and we do not move it as per this new concept. And regarding the noise here, I'm going to tell you there are some methods to verify, because here you see you have to place trades with a small stop loss. We actually watch price action when there is a breakout. We watch price action at this level. You see here don't notice any candle reversal pattern. Okay, so this is a untested area to buy. In this condition here again you do not see any bullish reversal pattern when price came here, so this is again not a justified area. Now after this breakout, we look for a bullish candlestick pattern like a bullish engulfing, but you see there is no pattern here, so we still do not buy it. Now after this breakout, we try to find a bullish engulfing pattern. You cannot find it here. Now here after this breakout, again here when price touch it, then there is no bullish engulfing type pattern, any pattern that suggests us buying. Okay, then again this is a breakout, and here you see bullish engulfing pattern. So if you buy here, what happened with this small stop loss, you always win. So this is how price action is combined with this trend line methodology, this strategy which uses a trend line. Now again here you see price touch this line, and you see there is a bullish type of engulfing pattern. Here you see the candle body is breaking above, and after that price there is a bull candle, so that's why price actually jumped. Okay, so usually you do not have to buy exactly there is a breakout. After that you look for a bullish candle pattern, then if you trade this trend line like this, then you are going to be winning on most of the condition and losing a very small time. Okay, so now I'll show you in this example, if this is a rising pattern, so we do not draw from support but we draw from resistance. So this is the low. I take this resistance and this resistance, and this resistance is okay. Now here I have to trade the failure of the support. So once price broken the support, you can see there is an inverted hammer. This is a bearish pattern. After that, price fallen. Okay, again next time price touch here, you can see there is an inverted hammer and price fallen. Okay, and here you see again this is a bearish engulfing pattern, and that's why price fallen. So it was verified. You never blindly sell, buy, sell on this condition. So this is the example of how to use trend lines and how to avoid trading on fake traps. That's all in this video. Thanks for watching.